Hey, welcome back, everyone. It is time for another red-hot cover call video. Well, hey, look, I'm back behind the mic. I'll tell you what, I've been so busy. It's hard to get a video out, but I tell you what, I'm always thinking of you cats. Today, I'm going to show you a trade for which you can invest a little bit of money, and you're going to be able to double your normal covered call profits. I'm going to show you how I amplify my near-term 30-day covered calls using this investment strategy. Before we get going, if you like anything you hear today, I want you to subscribe to the channel. It's right there and it's free. Bang that like button. It lets me know you like what I'm doing. And what we're doing is this. We're putting money on the table. The stock market is trading sideways to higher to lower. It doesn't really have a course right now. It just really seems to be moving based on momentum. And right now we have a little bit of good momentum. So what I've been doing is selling covered calls. I had some cash secured puts come off the board this month from last month, but we're using the poor man's covered call to continue to collect those little crumbs. Tell you what, March is always a good month for me. I believe last year I made $24,000 in the month of March. This year, it kind of crept up on me, and here we are. $12,600. And we're not even done with this month. We still have about 6 days left, and I could easily buy back some options and add to this number. But for the most part, this is what March 2022 looks like. Talking about the poor man's covered call, that's what we're going to talk about today, because I've been able to double my covered call profits. Now, if you understand the covered call strategy, you understand that you have to buy 100 shares of optionable stock. And then you write a covered call. You give somebody the right, but not the obligation, to take your shares away from you at a price you pick, a time frame you pick, and you get paid a per share premium. That's writing a covered call. That per share premium is the money we put on the table and pay the bills. That's our retirement income. Now, if you get a little stock appreciation out of that as well, hey, more the merrier. When I write covered calls, I look at it like a business. I'm in the business of being in retirement. I need to put money on the table, so I need to take all of my assets that I'm using for this strategy and keep them in play. A lot of people during this recent downturn stopped watching, stopped trading. For the month of March, they didn't put money on the table. So how are you going to pay the bills? This is a mindset as much as it is a strategy. If you don't have the mindset that you're going to be ironclad in your belief that whether the markets are up and down, you need to generate income, then you're going to have a tough time in retirement using the stock market. And that's the thing. We're using the stock market, whether it's up or down. We're going to take advantage of the tools in our toolkit, writing covered calls, selling cash secured puts. We're even going to use the poor man's covered call, where we can leverage leap options and do the same near-term covered calls. Now, that's what I'm going to show you today, because my poor man's covered call portfolio is actually growing. I seem to be picking up more and more leaps options, and I'm using a different variety of stocks. Today, I'm going to show you an ETF that I'm using. In fact, it's one of the biggest. It's a spider of the financial sector. And I have a reason for that. And I'm going to show you exactly what I sent to the members. I want you to notice why we picked this one. Tell you what, there's a couple reasons here, and you can benefit from it just like we have. So what we want to do is have the mindset that we're putting money on the table, and we're going to do what we have to do to continue that. Okay? So with that said, let me show you an ETF that I'm using to double my covered call monthly profits, and I'm going to tell you exactly why I'm using this one. Now, by now, you should know that I do have a membership, and I send out these kinds of communications to the members every day. And what we're talking about today is using the ETF XLF, which is the financial sector ETF, for a poor man's covered call. Now, the reason I picked this isn't because XLF is trading for $39. And if we were to buy a leaps option, a 95 Delta leap option, it would be very cheap. In fact, I think it's $18, which means to control 100 shares, you'd only need $1,800. That's not the main reason. The main reason is because I believe with the Fed raising interest rates, all of those banks and financial institutions that are selling loans are now going to make more money, right? They're going to make more money because there's higher interest rates. So I believe the XLF is an opportunity here where it'll trade sideways to higher. It should be held steady because the Fed is in a rising interest rate environment. So with that said, what trades do we have on the books? Well, what I looked at was a covered call and a poor man's covered call. Now, what I love to do is show the members the exact trades that I would do. Now, it doesn't mean I do the trade. In this case, I did do one of these trades. But what I want to do is show my members what I'm watching, seeing the world through my eye. My world has me doing covered calls, doing puts, and using the poor man's covered call in this stock market, regardless if it's up or down, because I need to put money on the table. Okay, that's very important to understand because I take no days off. For me, it's very important to stay active, and that's what I do. So using XLF, we looked at the 30-day covered call, and we looked at a poor man's covered call trade. Now, again, what I like to do is show the members what trades I would take on. Doesn't mean they have to, but if they were to take on this trade, they can feel free to ask me any questions navigating this trade because I actually showed them the trade that I'd be interested in doing. So, of course, I'm going to know about the trade. I like this for a poor man's covered call. Now, I give you a free month over at my website, cptdashboard.com. Click Upgraded Dashboard. You get a free month. You get a free month if you sign up. I'll tell you what, absolutely get so much feedback that what I'm doing benefits other people. I love it. It keeps me motivated, and it keeps me doing this right here. And this is why I like XLF. XLF, just like every other ETF, got hammered during the vid. Then it rallied just like everything else. And of course, it gets pounded with this recent sell-off due to the Ukraine situation. Well, notice what XLF is doing now. It has rallied back to where it might catch its old resistance line. Now, I don't know if it'll break resistance, but I think it's headed back towards resistance. So we can use this opportunity of XLF moving higher, knowing that the Fed's going to raise interest rates, knowing banks are going to make more money. This is a great opportunity for me to use the XLF. Now, looking at the 30-day covered call at the money or one strike out of the money, you can collect about $1. Now, if you bought 100 shares, you'd pay a little more than $3,900. You'd write the 30-day covered call, you'd collect $1 or $100. Now, with this trade being somewhat conservative, it's a great trade to dip your toes in if you're learning the covered call strategy. For me, it's a trade where if I put more money into it, with it being conservative, I can amplify my returns with this sideways to higher trading ETF. Now, do understand, this is a spider ETF. It has tons of volume and thousands of people around the world use it for selling premium. I love it. It's diversified. And notice that even if it were to fall on some hard times, it looks like its support's going to be around 37. I think I can manage a 2-point swing down during this time where we're coming out of a correction. So that would be a covered call trade. But let me show you how I amplify my covered call profits by using the poor man's covered call and purchasing the leaps so we can be protected in this trade. Now, with every poor man's covered call successful trade, we have to do the initial trade setup. We have to make sure the leaps call option we're buying does not have time value such that we can't be profitable in our very first trade. That's what I love to do these days, and I'll tell you what, I do not want to write multiple covered calls just to come clean. I want to be able to write my first covered call, make profit, and if my shares are taken away, I just recently had that with Merck. I did a 30-day covered call on Merck, had my shares taken away essentially, and made profit. We moved on. In fact, I moved on to XLF. So my very first trade needs to be profitable. The only way we do that is running the numbers through the Poor Man's Covered Call Tracker initial trade setup tab. It's for free. I don't charge you. Go there now. cptdashboard.com, click free spreadsheets. You'll see the Poor Man's Covered Call Tracker. Open it up, look at this initial trade setup window. Now, with that said, what are we doing? We want to look at the January 2023 date. What we're looking for is the 94.95 delta leap. So XLF is trading for $39.32. If I look at the 21 strike, meaning I could buy somebody's shares for $21, it's going to cost me $18.60 for that right. Now, that's a 94 delta, which means my leaps option, the one I just paid $18.60 for, will move 94% of a $1 move up or down in XLF. Now, that's important to understand because we're able to essentially take control of twice as many shares for the cost of what purchasing 100 shares would cost us. Okay, so understanding the poor man's covered call and how this works is very important. In fact, I'm releasing a video later this week talking about the entire poor man's covered call process. So what we can do is this. We can use the poor man's covered call initial trade setup to see if we're going to be profitable on our very first trade. So as you can see, I plug in those numbers for the leaps that we're going to purchase. So we're protected, having the ability to take somebody's shares at a certain price. Remember, in the poor man's covered call strategy, we don't own the shares, but we have to have the ability to buy somebody's shares. Well, as you can see with this trade, the time value represents less than 1%, or 28 cents. So the cost of the trade is 28 cents when I buy this leap. So you need to understand option pricing to totally get this. I'm buying the 21 strike. So that means there's intrinsic value in my option, right? There's $18.60 of cost that I paid, but that doesn't mean that's a cost. What it means is the difference between 21 and the price of XLF is $18.60 minus the 28 cents. I know I just made that confusing for everyone, but you have to understand options pricing to get it. You have intrinsic value, you have time value. Time value premium is the cost of every trade, okay? Want to minimize that as much as we can. In this case, it's a mere 28 cents. So if I write a covered call, which would be a 30-day or a 35-day covered call, and I write the essentially at the money strike $39.50, I would get $1.03. When you do the math, I would collect $1.20 from that. And my profit, my cash on cash profit, if my shares are taken away, will be 6.45% in 35 days using XLF. Now, here's the deal. You would have bought 100 shares, so you would have made $120. Because we used the leaps call option, I was able to buy twice as many shares, making twice as much profit. Look at this. 100 shares would cost us $3,932. 2 leaps contracts, the ones I just purchased, 2 leaps contracts cost me $37.20. I'm actually paying less. Now, I have control of 200 shares. I'm able to then immediately sell the April 29th $39.50 strike, collect $1.03. If my shares are taken away, max profit is $239. That's 6.45% cash on cash for this conservative ETF, a spider ETF to the financial sector that is absolutely performing better than other sectors in the market right now. This is where you retirees can really buckle down. You can really learn this strategy to put this kind of income on your table. This is where millions of people around the world use the selling premium strategy to pay the bills, live the good life. Okay? So what I want you to do is this. If any of what I do with my members interests you, I want you to come on board. It's less than 50 cents a day. And I'll tell you what, at the end of the day, you'll walk away saying, this guy's giving it away. I love showing the members the world through my eye. And in this case, it's how to use the poor man's covered call on a giant ETF like XLF. And of course, when you become a member, you get a phone app. I use it for the desktop app, but you get a phone app where you see all the communications. You don't have to be digging in your email all the time. I make sure that I post up every trade, every communication, and any video that I might do. Absolutely love using the phone app to send out these communications, and you can just look at your phone. Love it. And I love sending out all the trades because you get to see what I was thinking when I did the trade. That Merck trade right there is awesome because that was a Leaps poor man's cover call trade, and I was able to make max profit. And I'll tell you what, you can do it too. So hey, look, in my next video, I'm going to show you exactly how to do the poor man's covered call the way I do it, knocking down the profits. Until next time, be safe, be healthy, most important, be lucky. May all your covered calls be profitable.